To George Tsilis, senior markets correspondent, taking a look at a few of these tech names, and some have been going in opposite directions. Let's start off with Autodesk, which has been rallying after its quarterly report. Good morning to you, George.
Good morning, Nicole. Yeah, I mean, looking at Autodesk, this is, of course, one of the leaders in architecture software and construction engineering software, performing actually quite well post their earnings. They actually generated around 23% growth in earnings, coming in around $2.67 per share versus the 250 estimates, and sales were higher by 18%. If you look at them at 1.85 billion, beating the estimates, and 1.8 billion. But the other thing is the company actually raised their guidance for the fiscal year. In terms of EPS guidance, they raised it close to 3%. If you look at the high end of the guidance now range, around $10.25 versus the previous estimates on a consensus basis, right, $9.95. And sales also are estimated to be around 7.15 billion versus the previous 7.07 billion. So if you look at the EPS numbers in terms of guidance raised, it's about 2.5% to 3%, and you're seeing about a 3 times increase of that, with the stock up nearly 7% in the pre-market here for Autodesk, which has done a great job when it comes down to moving away from their transaction-based model to more of a subscription-based model. Seems to be working out as they continue to execute both on top-line sales and bottom-line earnings.
All right, and next up, Workday. That one has a different arrow this morning. The other one was up nearly 8%. What about Workday?
Yeah, if you look at the top and bottom line numbers, you'd be confused or confounded in terms of what's going on with Workday being down in the pre-market as well as yesterday in the aftermarket. Looking at the top line sales, they came in around 2.43 billion, besting the estimates, which are around 2.41 billion. That was still higher by 12.5%. And earnings also came in quite a bit higher at around $2.32 versus $2.18. Up 23% year over year. So you're basically seeing effectively EPS growth of nearly double the revenue growth. They also talked about how their remaining performance obligations for the year, at least on a 12-month subscription basis, higher by 17.6% versus 16.3% compared to the same quarter, last quarter. But if you actually strip out acquisitions, this is where the challenge lies. I think that's why the analysts are a little bit more cautious on the name. It only increased 14.7% versus 14.9% last quarter. So essentially, organic subscription growth was down sequentially quarter over quarter as you compare it from the previous year. And therefore, some of the analysts are a little bit more cautious on the name, irrespective of the fact they had some really good numbers overall. KeyBank lowered their price target to 260, as well as Stifel. They maintain a hold rating at 235. Now, again, these are numbers that are higher than the current price, but it comes down to organic growth versus inorganic growth, and most of those RPOs are coming from inorganic growth because of acquisitions over the last couple of years.
All right, and just a quick market thought here. I mean, we have jobless claims here at 7-month lows. You have J.P. Morgan trying to spin a positive outlook for 2026. And what would you like to add?
Cautiously optimistic right now, Nicole. I think if you look at the NVIDIA day, which was, again, last week, in terms of price action, got to get above that high on the S&P on that particular day. It's an important line right now that I'm looking at. We're getting close to it, but you have to keep in mind that right now, volatility is still a little bit elevated, so I'm cautiously optimistic, but nonetheless still optimistic going forward.
George Tsilis, great to see you. Thank you so much.